Everyone, welcome to today's video. Today we're going to go through offering memorandums, specifically of multifamily apartment buildings, and how to decipher them, what to look for, and more importantly, what's not listed in the offering memorandums. And this is going to save you a lot of time, whether you're an investor or an agent working with a buyer. You need to be able to cut through these documents pretty quickly because there are a lot of them out there. There's no standard for putting these together. So you'll see some that are aggressive, some that are conservative, some that are long, some that are short. So we're going to go through a few examples here, three examples, and you're going to see what I pick up. Now, I've gone through thousands and thousands of OMs, as they're called, in my day, and I still look through them daily when new deals come on the market. And so I've got a lot of experience looking through them, and I instantly know what to look for and also what's missing. And this all helps paint the narrative of a particular property without going into too much depth. I'm not calling the agent who put it together. I'm not putting together, an underwriting pro forma model. First, I want to go through the offering memorandum and get at a glance context about what's going on. And let's dive into this one that I have up on the screen right now. So this one is in Little Havana in Miami, which is it's a neighborhood just west of the downtown Brickell area. And from the outset, I like this picture. It kind of shows the location and the proximity to the city. I can also, some things that I see around this subject property, which they've pointed out. Look, there's a development right across the road. That's always a good sign. Development always means, increased activity. It's going to bring property values up. I'm also seeing a lot of like-for-like properties. So this apartment building here, which is a little smaller, this one that's kind of horseshoe shaped is a bit bigger. Similar one down here, some other apartment buildings. So this looks like an area where apartment buildings do exist. It doesn't look like it's out of place right here. So let's go on to the first page, and you'll see that I spend a lot of time on some pages, and other pages I'll gloss right over, and that really depends on what information it brings. So this is the offering summary. I do like to read through the description and really see what stands out. I'm not going to read it, 10 times over or really slowly. I just look at for key points. So unique and exceptional investment property. I'm sure it is. Every offering memorandum says this is an exceptional property. Let's see where we get to the meat and potatoes. Unit mix of 8 medium size 1 bedrooms. That's interesting, medium size, and 4 spacious studios. So I do take quite a bit from that. What does spacious mean? Obviously, that's subjective, and their goal is to try and make this seem as desirable as possible. Let's see if it really is going to be something that's spacious later on. Nestled in the heart of Little Havana, we knew that. Take part of this incredible renaissance of blah, 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 blah. You can see a lot of fluff, and this isn't just on this property. This is on every offering memorandum that you'll see to varying degrees. The rental market in Little Havana continues to flourish. If you're looking in this area, I'm assuming you're already knowing a bit about it, unless you're an out-of-state investor looking at an area for the first time. This might be useful, but otherwise probably not. Unlock the potential. The potential is limitless. Interesting way of putting it. Actually, I did read this past part of the paragraph. Unlock potential for value appreciation through renovations and updates. So what that tells me is that it's not in a renovated condition, which is probably a good thing if you are a value-add investor like most investors out there. But if you are looking for something turnkey, this might not be for you. So this is already setting the scene. It's giving you some context as to what to expect without even seeing an interior image. you can already know to expect that this is probably in not a great condition, or at least outdated. So some information here. Total building size. So they said spacious. So I like to pull up my calculator here and then just do some quick math. I'll make this a little bit smaller. So we're looking at, we know it's 12 units. So I'm going to go 8458, sorry, 8438. And then I'm going to divide it by the number of units, which is 12. So we have an average unit size of 703. So even if the one bedrooms are on the smaller side and the studios are the larger side, let's just say they're the same size, 703 is not exactly spacious. I think that's at least standard, um, if not a little small. And my question would be, is there a potential to turn the studios, if they are spacious, into one bedrooms and command more rent? Potentially, but if it is skewed more towards one bedrooms in terms of area, we could be looking at studios that are 650 square feet, which may not be conducive to turning them into one bedroom. So, that's claim earlier that it's spacious remains to be seen, but I'm a little bit skeptical just based on this math here. And the other thing, it says total building size. It doesn't say total rentable square footage. So this number is including the common areas on the interior. So if this, call it, I'm guessing you go into this entrance door, the stairs, this includes the stair square footage. So this number is actually probably on the heavier end of actual unit square footage. So that's what I'm deciphering from this so far. Total units, 40-year certification. That's a Miami thing. Pro forma cap rate, 7.33%. So keyword there, pro forma. They're really saying this is what it could be if you brought rents up to market rent, or perhaps if you renovated it. We don't know. Again, it's not about what's necessarily here, but what are they omitting? And to me, they put pro forma cap rate, but they don't put the current in place cap rate. They don't put the current in place NOI. So immediately alarm bells are going off in my mind, thinking, this probably means that this has, I'm going to keep PG, but not very good rental income. It's probably under rented, lowly rented. And then the question would come, why is that the case? Is there something wrong with the building? Is it just management that hasn't increased rents? But the fact that they're omitting the current numbers probably suggests to me that they're very low. And they may bring it up in future pages, but the fact that they haven't stated here is already giving me some extra information. So asking price 2.6 million. Let's go to the next page. Don't know what happened with this text here. I don't know if that was for me downloading it, or an error on their end. But anyway, this is just about the submarket. I usually skip over these again. You already know the submarket. It's not really necessary for my purposes. Again, talking about Little Havana, some location information. You can really skip over a lot of this. Here's some pictures. Again, I'm kind of questioning these pictures. I mean, this one, and this one are pretty much the same picture, especially these two. These are almost identical pictures. I think they are identical, actually. So I don't know why they would put two of them here. This fourth one maybe shows a little bit of the side, but not really a ton of information to go off. A little bit suspect, but let's move on. All right. Proximity view to the city. Another proximity view. Okay, I get it. They used a drone. They want to put as many drone pictures as they can in there. Not really great information on it. I'd love to see some interior photos. More exterior. You can see the baseball stadium there. There's some construction. And that's actually the end of this particular OM. So it was only 11 pages, which is I definitely like more concise OMs, but the fact that there weren't any interior pictures, starts ringing off some alarm bells in my mind. Like, why aren't there any interior pictures? Could be as simple as, hey, they couldn't get access to take photos. Or it could be that the interior is in such rough condition that they thought it would scare people away. Who knows? But that coupled with the fact that they don't have any rental information is again another kind of red flag, if you will. So let's move on. I don't want to spend too much time on these, and normally I'd go through these in a couple of minutes and pick out some of the issues that I have, but let's look at this one. This is a Morningside property. It's called, as you can see, it's a lot of pages. I mean, we're looking at, 56 pages here, a lot more robust than the other one. But longer doesn't necessarily mean that it's better. And we're going to see that in a second. So, first of all, cover photo. What do I look from this? Great, fantastic photo. It's like head and shoulders above the rest of the neighborhood, which I really like from an aesthetic standpoint. So that's a great picture right there. Okay, another photo. Let's see something that's a bit closer. All right, first building photo. It's got some information here which isn't really relevant, but a little bit of an outside photo. Let's keep going through. All right, we know it's by a road. They got a contents. If it has a contents page, that usually means it's going to be a long slog getting through it. But you can skip through these. All right, what am I looking at from this picture? A little bit of graffiti on that electric box. Not the nicest sign, but again, just something that caught my eye. Right, let's go through a couple more of these. Kind of seeing some fluff pages in between here. Investment overview. All right, so let's read through this page, see if anything jumps out. 24 unit mid-rise apartment building. Great. Same owner for the past 42 years. That's good information. I wouldn't have been able to deduce that from any kind of numbers, so good to know. Um, Offers larger floor plans and desirable unit amenities than its competitors. It's good to know. Good information. All leases are month to month and approximately 50% of the current market rate. That is really low. 50% of the current market rate. Again, huge question mark there. Is it the fact that the owner was just not wanting to raise rents? Or is there something inherently wrong with the unit? That's the questions I'm asking myself right now. Unit mix includes 6 one-bedrooms at 771 rentable square feet, 6 two-bedrooms at 865 square feet, and 12 two-bedrooms, 2 bathrooms at 928 square feet. Good unit mix. All apartments have central heating, air conditioning, private balcony, hurricane impact windows, and sliding doors. That's big in Florida. Additionally, approximately 20 of the units have been updated with all new white kitchen cabinets. So there's 24, so 20 have been updated. Good information. Yeah, as far as descriptions go, this is actually quite useful. So let's keep going through. They kind of just summarize the same information there. I do like that you can park underneath. It's kind of cool. More exterior photos, property tours and offering process. I can skip over this. I'm not gonna, I'll come back to it if I'm thinking about putting in an offer. Good picture on the roof here. Looks like a clean roof, newer condition. This is stacked pretty neatly. Again, they look different models, which is kind of odd, but they all look in decent shape. Again, I'm looking for surface level things. I'm not doing an inspection or doing my due diligence based on this, but it's giving me a quick feel for what's going on and to see if it's worth investigating further. So rentable square feet, 20,965. So they actually use rentable square feet here as opposed to the last one we looked at. So I'm quickly going to do a breakdown here and say over 24 units, 873, and that's a similar number they've got here. So again, just trust but verify. Number of buildings, concrete block. All right, this one does have some interior photos. So again, go with your gut. What does your gut see? What catches your eye immediately? I see white appliances, which I think are an outdated look. I generally like to see stainless steel, which could be a value add. The kitchens are a little tight, but for this kind of product, it's common. The cabinets do look nice. These T-bar kind of handles of flooring looks good. A lot of white going around. Limited windows here, so you don't get a ton of natural light. But overall, they look pretty standard for what you would expect in this product. I would say not a huge amount of renovation upside in the interiors. Look at these common areas. You can see that they do look very dated. It does look clean, which is good. But if you were looking to do a more intensive renovation, you could definitely come through these common areas. And then now we're on to, some more photos. Again, I kind of brush through these photos. You can look at them as you're getting more serious about a deal, but they don't give you a ton of information. So yeah, as you can see, it's a lot of, we've got, property information, some more pictures. All right, some market comparables. I do like going through some of these. At first, when I'm looking at it, I'll kind of just take them for what they are. I'm not going to go through every single comp and verify that this actually happened or the condition of the other ones. But, they do have a lot of comps here, and based on the level of detail they've gone through in other docs above this, they seem to be reliable. So again, trust but verify this number. You can see 2366 is their average rent for one bedrooms. 2 bed, 2 baths are a couple of $100 more. More rent comparables, sale comparables. Again, I'm going to kind of brush over this. You know that brokers are always going to put together their best, the best comps possible. So take it with a grain of salt. Make sure you look at other comps that are sold. Usually they're going to be very selective about what they use to present this in the best light. Now we start to get to the good stuff. And what are we at? Like page 37 already, the financial analysis. So I had to dig through quite a bit of fluff. And granted, there was some useful information in some of those pages. This is really what I want to look at. And usually I'll actually jump to this page first and then work my way outwards. So first I'm looking at current and pro forma. So this one actually does have a current, which is good. And what I look for is the difference between the current and the pro forma. So this one actually has a vast difference. We're looking at about 250-ish K in rents. So again, question comes up, why is it so lowly rented, especially if they've been renovated? What else do I look for? I do look for how accurate is this net operating income number. Now, of course, brokers are known for underestimating the expenses to make the NOI and therefore the cap rate look better. A quick check you can do with this is bringing this calculator back up. I like to do the percentage rule, the expense ratio. So we're going to look at 237, 411 in the current divided by the current gross income, 493, 200. So this looks at the NOI as a ratio to the gross income, and you can see it's 48%. I usually look for around 60%. I think that's a good number. This is actually on the lower side, meaning that, yeah, these probably are under-rented numbers. Where I get suspicious is if this number is high. So if you're looking at 75, 80% the NOI compared to the rent numbers, that almost always means that the expense numbers are being undercalculated, which is not a good thing. You don't want that, which, then for me, I look at the rest of the data put forward with, a little bit more of an open eye because I'm not necessarily trusting that they're going to be that honest. But let's look at the pro forma. Now, for most times, I just throw away the pro forma. I only look at one number, which is what the rents could be. And usually the rents are going to be on the more optimistic side. So if these rents are, say, like 497, I would say, all right, then this doesn't have a lot of room to go up. This one clearly does have a lot of room to go up. Um, so take that what you will. The biggest thing I'll actually do with this one, since we did the same calculation, let's look at the 442 expenses and divide that by 720. So you can see it's 61%. So I'll actually say that credit to these brokers, they actually probably put together a pretty accurate expense form here. You can go through it line by line. I'm not going to, but I don't need to go into that level of detail for a first look. I may do so in future, as I'm looking more and more likely with this deal. So one other thing that catches my eye here is the total return. So they're looking at a 3.14% entry cap rate if you buy at the list price, which is very low. I would say, knowing this area, it's probably more like a 5.5%. But if you increase the rents, you can get it to a return of 5.85%. So why I don't like this is because the owner is saying, hey, the rents are super low, you can pump them up and then create a lot of value. But I want you to pay me that value up front, and you really don't get much value after that. So, it is what it is. This deal has been sitting for quite a while, exactly for that reason. My response would be, hey, if you can get this thing up by 250K like you claim it is, why don't you do it? And again, that comes down to, is there something wrong with the building, why it can't achieve these rents, or is it just the owner not being willing to do it? And if he's not willing to do it, well, I'm not willing to pay that 3.14% cap rate. So again, I'll kind of brush through these next ones. Rent roll there, really useful. Good to see the variation. You want to look at the maximum rents for a floor plan, and then the minimum rents. I'm not going to go through it again because it's not that important. Actually, it lays it out pretty well here. So again, I appreciate that from the brokers who put this together. And then they've kind of laid out the expenses and the pro forma again in a bit very overlapping detail of what we just went through. But this one's obviously milking it out a little bit. A lot more pictures, market overview. I usually skim through all of this. I mean, there's nothing really here that's going to make or break the deal, especially if you're familiar with the area. I don't need to know the quality of life factors or the median age. That's not information I'm going to necessarily get from an OM, or I need from an OM. And so, yeah, we're getting towards it. So you can see it's 52 pages, and effectively, about three of them were very useful to us, and the rest were not so much. So, you could cut through this in a few minutes very quickly. Let's go on to the last one here, and I'm not going to spend as much time on this one as I did the other ones. But I just wanted to point out where you can see some, um, to be honest, I'll call it a little shady. This is I'll give you the context for this so we don't have to go through it completely, but effectively it's 53 units, and then the developer came in and built 53 more new units, so they're calling it 106, and this is in Boca Raton. And so they have a property description. This was actually pre the development, so a lot of just renderings. And then they actually came out with an updated executive summary with financials here, which I do want to go through. And this one is um, a bit more useful, I would say. And this is only one page, a couple of pages, so they really cut to it, which I desperately appreciate. So here we go, 106 units, 53 new construction. There's the floor plans there. In addition, there is 53 units with built in 1988, renovated in 2015. So I take that information and say, hey, 2015, we're in 2024 now. Those units are probably getting a little dated. They probably need an update. So value add opportunity there. Income and expenses. So again, we're comparing potential and current, not because I'm taking their potential as the gospel and running with it, but I want to see what do they see as the maximum potential of this property. Kind of odd that they have current on the right hand side. Usually the current is on the left hand side, but that doesn't change much. I'm looking at here we have cash on cash capitalization rate 5.5% for current. But weirdly, it goes down to 5.28% potential. Very strange. I've never actually seen it go down, so let's do some investigating why. Gross scheduled rent. So rent actually goes up a couple of hundred K. So what happens here? Expenses. Look at this. Real estate taxes, they almost triple. Insurance goes up, 60%. Electric goes up. Water and sewer. These are significant jumps from the current to the potential. Almost everything goes up. Payroll goes down a little bit. Landscaping doubles. Maintenance repairs goes up 50%. So what is going on here? Why are these going up in potential? I actually figured this out, and this one took me a few minutes to come to the conclusion. They actually use the rent roll of the current 106 units. So they just built the 106 units. They used the income of the 106 units, but they used the expenses when it was only 53 units. So, of course, you're going to get a lot, some really skewed numbers when you use that logic. So I'm going to, you could figure that out pretty quickly as well. Remember, I went through this 60% rule, and how you could find this out is how I found it out actually was putting in here we have the net operating income. So we had 2,495,601.98 divided by the income of 3,226,906.72. And you can see 77% of the rental income is the NOI. So immediately when I did that calculation, I said, hey, there's something not right here. And that's where we got, that's where I started to look deeper into it. And I said, hey, why are they jumping so much? And I realized that they're using the expenses of 53 units and the income of 106 units, which is just blatantly wrong. I really have an issue presenting it that way, and that's probably why someone who opens this up is just not gonna be happy with it. And this explains why the potential actually goes down, because they do use more honest numbers. And I'd say, these look like pretty good numbers on the surface. And let's do a quick ratio check here of the total expense, the net operating income of 2,375,665.72 divided by 3,732,376, and we get 63, which is a lot more normal numbers. So this is actually probably pretty in line. I could definitely wrap my head around these numbers. So you're definitely not buying it at a 5.5. Maybe you're buying it in the fours, and then you're getting it up to a 5.28. But just wanted to go to show that you do have to look into what is the narrative, what is being omitted here is very important, and what is the narrative that it's telling you based on the numbers. So that's all we have for this week. Three very different examples, a 12 unit, 24 unit, 106 unit. We have some very long OMs, we have some short ones, but being able to cut through the meat and potatoes of this is going to save you a lot of time and is just going to make you be able to see a lot more deals and really know what's going on with the property before you waste time talking to the broker, talking to an investor, running an underwriting model. So that is the purpose of this exercise. Thanks for watching. We'll see you next week.